Graham.
crazy busy day, which is excellent, really, isn't it? In business,
Yeah,
when you have a crazy business day, a busy day. So,
kind of
did
what
you
you
get a
want, right?
chance to watch my short little video?
I did, yeah. I saw your journey. I mean, you're obviously a fellow Brit, so I
Yeah.
saw your journey about how you climbed up, got a whole lot of units under contract, and then unfortunately didn't quite pan out so well during the the biggest financial meltdown of our lives. So I mean, if it's going to happen, that's when it's going to happen, right?
Yeah.
But now
Oh, it's a
you're
thrill to be
on the
on
way
the
back,
call
right?
with you because you're a fellow Brit. I mean, I didn't realize that, so that's even better.
Oh, there you go, there you go.
I love hearing
But
it.
yeah.
It's because it's so rare to hear it. Are you here in the States, you're in New York then? Yeah.
So yeah, actually, funnily enough, I'm not in New York right now, but I was in New York until very recently, and we'll be going back sometime soonish. So I'm just kind
Okay.
of saying I'm still in New York because, like we're going to be there. So
Yeah.
we were there until October last year, and then my wife got a job. So we thought, okay,
Mm.
we'll rotate out and come back in a few years.
Yeah, fantastic. Well, what an honor to be on the call. Thank you for watching that video. It saves a bit of time. So tell me more
Oh,
of
sure.
your journey into real estate, why real estate, and what I can do to help you.
Happily. I mean, it's very so basically, I started in 2020, bought a fourplex in Ohio, sight unseen, made all the mistakes you can possibly make as an
Yeah.
out of country, out of state investor, like never even seen it. I mean, it worked out fine in the end. It was on a fairly good mortgage. We had to evict the one tenant that I inherited because she just wasn't paying. She was on $400 a month. Ended
Wow.
up refurbishing the whole place, all four units. And got it rented out at like 650, 675 per unit. So it was doing quite well, making
Okay.
already more than when I bought it.
Yeah.
Then fast forward about another year and a half, and all of a sudden one of the pipes bursts in the boiler room.
Okay.
Nobody notices it because, the
Oh,
management don't go and check the boiler room every day, right? I mean,
right,
I can't really
right.
blame that.
Wow.
Mold spreads throughout the entire building,
Oh
like to the extent
no.
that they go, yep, we're going to have to evacuate people. So we had to chuck all the tenants out. Got it, got it kind of done. It sucked, but it worked. And of course, everybody has a mold exclusion in their insurance. But
Mm,
luckily, I was able to fight that, able to make it work so that they actually did pay me because, well, they have a mold exclusion, they don't have a burst pipe exclusion. And
right. Very good.
so yeah.
Okay. Yeah, that's what caused the
So
problem. Yeah. Yeah.
that took a bit of took about 6 months of wrangling, but it was worth it in the end because it
Mm.
meant I didn't have to fund everything myself
All right.
after having funded it all myself, of course. Then got it all let out again for about 850 a unit.
Mm.
And by that time, the value of the property had gone from 128 that I bought it. And I thought, well, you know what? I reckon I could get around 250-ish. Ended up selling it for 239, 500
Oh no.
and was quite happy. It was like,
Yeah.
4-year hold,
Okay.
212%. That's good,
Yeah.
right? It's not too bad. Yeah.
Right. Yeah. You got the whole story of real estate, the problems and the gains,
Yeah,
the
yeah. I mean,
rewards.
because it was undeniably messy, but despite all the mess, still made money. And
Yeah.
that's a really nice feeling because it
It's
could have gone
cool.
completely the other way. And it certainly
Yeah.
felt like it was going to for a while. So,
Mm. Right, right. I nearly interrupted you halfway in that story. I thought, why real estate? You have all those problems. But obviously you got the reward, which is great. And you battle through that and you get stronger. What doesn't kill you, right? And improves you.
yeah, precisely, precisely. And
Yeah.
the reason I decided to sell is just because it was a good opportunity to realize capital gains. Of course, naturally, about a month and a half after that, I discovered Pace's community, all these wonderful people, these innovative solutions, and I'm like, oh, maybe I shouldn't have sold it. Maybe I should have, seller financed it or done something like that. And
Yeah,
I'm like,
right, right. Maybe so. Yeah, that's right.
but
Get
hey, you live and learn, right? You have
you
to be open
do.
to these
That's
opportunities.
true.
And so now I'm here. I want to get back into it. I don't want to start purchasing new assets immediately, but I definitely want to start that down the line. At the
Mm.
moment, I'm primarily focused on gator lending, and I have a deal, probably going to be one of my first, that's kind of creeping up around on me, and it's going to be 120,000 hard money lend for between 3 to 5 years. The borrower wants
Okay.
to refi a place that he's buying sub two in Georgia and no, sorry, in Alabama. I keep on saying Georgia for some reason. In Alabama, in Birmingham, and it's he wants to do a pad split or sober living. and it on paper it looks like it could be quite good, but I'm concerned about the amount he's going to borrow to refurbish it,
Hmm.
and he also needs to borrow the earnest money and the entry costs as well.
I
So I'm
see.
kind of, trying to underwrite that in my time and going to
Hmm.
bring it up in the underwriting Zoom today and see where we go.
Right, but what's your longer, bigger vision here? So you joined Gator, but
Yeah.
what's your bigger vision? Where will you be in 5 years? Is doing Gator just the idea of build up some cash, and where does that lead to? What's your where you
I mean,
going?
primarily, Gator for cash flow, I think, is a good model, especially once you have the contacts and if you're not afraid to put the work in. It seems like you can make decent returns, but you also have to have a lot of capital outlay. So that is in itself a risk that you need to manage.
Right,
I don't want to be dependent on that long term. So I do want to use this as a vehicle for building relationships to
right,
then start to acquire new properties through joint ventures and
right,
probably going back into multifamily into apartment buildings and syndication maybe. But I kind of have this idea that I'd love to do holiday rentals. But I also know there's a vast amount of, management involved and it's a whole new area that I haven't played in before. And I'm kind of thinking to myself, do I really want to jump into a new ball game,
yeah,
especially internationally? It
right,
might not be
right,
the smartest move.
yeah.
So,
Yeah. You're right, and that's why first time round I wrote this book,
yeah.
Cautionary Tales from Real Estate Investing, because I made a whole load of mistakes with multifamily. That's how I started with the five, and
Hmm.
but multiplied it up to over 109 dollars, I think it was at the peak.
That's
Well, I was
huge.
actually shooting for 500 at the time, but got knocked out of the game. So licked my wounds
Hey,
for 8 years, and um,
stand back up again, right?
yeah, that's right. I did. I did. It took me 8 years, but yeah, I did eventually get back on the horse, as it were, and got my real estate license. Thought I'd do retail, but my heart's in investing, so large
Mm, mm.
multi-family makes a lot more sense.
Yeah.
By large, I mean 100 units or more, 10 million to $100 million. That sort of
Okay.
range is what I'm looking at. And you think, oh, that's way too big for anybody. Well, it's not, because we just find the
No.
people who got it.
Yeah, right. Exactly. You just need the syndication and then just structure it and off you go.
Exactly. So I heard the word syndication, so it's good that you use that. So you're probably familiar with that. And it's the probably the fastest way. Nothing's super quick. It's not get
Mm,
rich quick scheme, but it is probably the quickest way of building substantial wealth and where you're going to reach your financial goals in probably a shorter period of time than gator lending or doing single family homes and doing it the slow way and the painful way as well, because I've already been
mm.
through that. So, I mean, it's not going to be painful for everyone. Somebody's going to get it right, and or have
Yeah.
beginner's luck and do it right. But there are ways of doing it right, the smaller multifamilies. If I'd known
Mm,
about um, syndicating with other small apartment operators, that would have been a solution. Joining together with other operators who do
yeah.
small multifamilies. By small, I mean commercial from 5 to 100.
Yeah.
Nothing
Okay.
less than that, where you don't have on-site
Still
management,
not small,
you don't have
but
employees and all that jazz. Because when you go
yeah.
above 100, you got scalability. And that's
Yeah. You
why I
need building
chose.
managers.
Yeah,
You need,
yeah.
yeah, yeah.
Right. So, and also you get the more serious players at that level, who
Right.
played in the game a lot longer, and
Mm, mm.
that's where they want to invest. And so there's money actively looking to be deployed in the large multi-families. See, so you think,
And is this usually, are you usually taking over existing assets or are you usually looking to develop
existing
assets?
existing assets, yeah.
Okay, right.
Usually a C class and a B class location.
Mm,
Okay, C class building and a B class location. Um, so they have on-site management, you have your handyman, your landscapers are all employees of the
yep.
management firm. And then we do the asset management, which is managing the managers, you see. So
Mm,
yeah. It's all in my book as well, actually. I wrote this book, Investing Large Multifamily Solved. You can get that on Amazon. And also
nice.
restarted my YouTube channel. There's 21 little educational snippets there from 5 minutes to 12 minutes long. So
Yeah, I saw. I've been kind of having a look at your page, you know, how you can link through from the group and see just the things you've posted in the group from your page. It's
yeah,
quite nice to see all the different videos you're doing and the books and everything. So I
yeah,
think I'll have to check out some of those. Like in
yeah.
between going through the course material, right? That's the problem. There's like a vast amount of course material,
I
a vast
know,
amount
I
of
know, I know. It's
there's so much of
crazy.
everything.
But yeah, it's my mission right now to try and share as much of my knowledge as possible.
Hmm.
You know, it's a lot of um, good feeling and helping others not make the same mistakes I did. You know,
I
63,
bet. Yeah.
so you know, there's not many more years, you know, as it were, to get too somber. But you know, it's nice to help others, you know, not make the same mistakes. And
It is, of course. Yeah.
people
So
are,
what are you working on at the moment?
what's that?
What are you, is there a specific deal you're working on at the moment that you're looking
If
for
there
investors
isn't right
on?
now, no. When there is, it's usually a small window of opportunity. I will
Sure, yeah.
notify everybody. They'll come to a Zoom call, see the presentation, and then you pull in the money at that event usually. That's kind of how it works. And so the preparation is all beforehand, is building up your network
Yeah, yeah.
and seeing who's interested and things like that. So we can do the 506B or C, you know, depending on
Hmm.
what the deal is when we find it. Yeah.
And do you only focus on apartment buildings then, large multifamily, or do you also look at large portfolios? Say, you know, somebody's got
No,
150
no,
units they're
no,
selling
no,
off.
no, no, no large no portfolios, because you don't
Okay.
get the professional management with those. You see, what
Yeah,
you
true,
want is
true.
the large because they have the office and the staff are on site. And
Hmm.
you know, when the cat's away, the mice will play, right? But if you've
Yeah.
got management on site, you have a much better run facility.
Hmm. Hmm. That makes
Ironically, you know,
sense.
because they're keeping their eye on it, right? And they're the security, they're the people managing the property. When there's a problem, it's acted on quickly. Yeah, so you get
Yeah, of
that with
course.
100 units. Well, portfolio could be scattered across the whole city.
Yeah, and it's going to be a nightmare. Plus, I mean, even
And you
just
wouldn't
travel
get a
expenses are
management
going to be
company doing
complicated.
that. Right, right. They wouldn't do it. It's just not feasible. Or you would find somebody, but they'll steal the money off you and they don't look after it properly. And you have all that
Hmm.
sort of scalability problems with
Yeah.
maintenance as well. As scalability is an issue with portfolios. And
Okay.
so those portfolios, they should really, they're hard to take on because
Hmm.
of that. You know, you've got to break them up. You've really got to do a fix and flip the whole portfolio, and that's complicated. Get
Yeah.
that done. You know, that's a nightmare. That is
I'll
that
bet.
is
Yeah.
buying a nightmare. That is, especially if they're selling it. Why are they selling it? Well, if it's an old man, you know, and he can't.
They
Nobody
can't manage
wants
it
to
anymore.
inherit
Yeah.
it. Yeah, yeah, it's a problem.
Hey,
Mm.
you can imagine if you buy 100 units, you know, there are only 350 odd days in a year, right? How it's going to take you almost the entire year just to go and see each unit properly or see
Yeah,
each building properly. I see.
yeah,
Yeah. If
yeah,
you buy 300 units, whew, or 300 buildings, plus you're going to be paying so much in tax as well,
yeah.
individual
It's,
tax. Okay.
it's not
So
very
then,
good.
do you mind talking me through like some of the most recent deals you've done? Or because I'd be really
Um,
interested to learn.
Yeah, I've been largely networking most of my
Okay.
time. At the moment, I'm promoting Legal Shield, which is attorney in your back pocket. Um, and I'm actively looking, but
Hmm,
they're rare, so you may get one or
for
two
sure.
hits a year. It was only back in July where I decided my niche was large multifamily and where I came
Okay.
across a solution and what I've been through before, you see. So,
Hmm, mhm.
so as I say, when we find a deal, I've been through all the training, done all that, you know, so not that I know it all at all. I'm building my team, you see, the network.
Yeah.
It takes time to do that. So
Yes, of
there
course.
are no
Yeah.
deals yet, you know.
Okay.
Yeah.
Oh, no, no new deals. I mean, you've still got all those deals you've done in the
Oh
past.
yeah, yeah. Read the
Yeah, yeah.
books. Read the books. Go through the videos if you want to do that. If you feel it, if you get, especially the first one, it's only 26 pages, and I'll do a one-on-one coaching, and I can go over all the lessons and why you don't do certain things. else
Mm.
than the dangers, the thinking behind it, stuff you wouldn't think about if you just bought, a 5 unit or a 12 unit apartment building. Think, well,
Yeah.
what's wrong with that? That's better than a quad. Well, it is better than quad, but it's still the same overhead of managing it, and you're not going to find
Yeah.
somebody to manage it for you. And you try to get a tenant doing it, and then they want rent off, and you're not getting you're devaluating the building by doing that, and you
Mm.
still got maintenance problems, and we can point all these things out. In other words,
Yeah.
yeah,
Right. Right. So I
yeah,
guess then that some of those things, because I mean, I'm thinking now back to this guy that I'm working with, who's talking about doing a sober living pad split.
yeah.
He's contemplating the idea of getting one of his tenants to be like a semi-managerial position to
Mm.
ensure that people, keep their responsibilities. But it sounds like actually that's going to encounter the same problems that you're talking about with somebody that buys a 12 unit.
Yeah, it can be done, as I say, but there's easier ways of doing things. It depends on your goals when you think about it, why
Sure,
are
sure.
you in real? That's why we ask these questions. Why are you doing this business? Why are you in real estate? What are your 5 year goals?
Right,
Not
right.
everybody wants $1 billion in assets, right? Or
No.
manage 2,000 doors or whatever.
Mm.
Um, so if you want to just make 5,000 a month, then Gator's great because you can do that.
Yeah,
Just
yeah.
keep doing it. But you're only as good as your last sale. You still
True,
got to find the
true.
next person to lend the money to. And every
Yeah.
time you do that, there's a risk. Every time before I was getting Gator, I lent money out, and every time I did, I lost it.
Oh, okay.
Now, I
That's
wasn't
painful.
totally ignorant, but even as a
Mm.
gator, even as a lead gator, even if you're in leadership, you're going to lose money. Ask them. They've lost them.
Yeah,
Six
sure.
figures
Well,
and things. And so it's scary. So you not only got to know what you're doing, you do have to have an attorney in your back pocket, by the way, which
yeah,
will
yeah.
reduce the cost of doing business. You pay a monthly fee, but um, yeah, so you got to think about all those things and build that into your model because you're not going to get 100% of your money. You are going to lose. It's
Mm.
like playing the tables. It's like gambling. You're not going to roll the perfect dice every time. You're going to lose some of that time. And it's how
Sure.
much you lose. You might lose 40% of what you make. It might be 30, but there
Mm.
will be losses. There is in every business, by the way. I don't know why
Yeah,
we're
of course.
surprised by this. We go in thinking we're gonna reap 100%. Well, we don't.
Mm, mm. No,
Yeah,
naturally, I mean, there's always going to be a cost of doing business. It's
yeah,
it's your cogs essentially. Yeah.
that's right. So you look at different ways of reducing your cost of doing business. So when you
Mhm.
look at your goals, always do it 140% or 150%. So you want to make 100, you go for 150, then you'll hit 100. Yeah,
Yep.
yeah,
Okay, that makes a lot of sense. It does.
yeah.
Cool. And then, do you think? I mean, at the moment, you're primarily focusing on the large multifamily, so you're not really looking to do much Gator at the moment, or
I will do, yeah. But I'm waiting for those to fall in my lap, as it were,
right, right.
which
I
they
mean, doing your
do.
networking anyway, so you're establishing. Yeah, yeah,
Yeah.
that makes
I
sense.
mean, I'm
Yeah.
doing 5 or 6 of these calls every day. Um, networking, and people send me deals. I look at them. If they are a deal, then I'll do them. So they kind of
Okay.
fall in your lap. And so it's kind of cool that way, while you're
Yeah,
doing
definitely.
the other stuff and you're getting to know people and participating and trying to provide as much value as I can. So
For sure. Yeah.
yeah,
Yeah, cool, cool.
yeah,
I'm glad that it's kind of, it's been something that you've still engaging in as well. And I
yeah,
think I quite like the idea of, because it's almost like you're gatoring with a purpose, if you know what I mean. Like you're doing Gator, but your purpose isn't Gator. Your purpose is this large multifamily syndication,
yeah.
and getting that network established while
That's
making
right.
a bit of money on the side is
That's right.
kind of a good
Yeah,
way of doing it.
yeah.
So yeah,
That's
I'm
right. You
really
have to.
seeing the purpose of your initial questions where you're
That's
like,
right.
are you
Yeah.
looking for the 5 years? Or you want to just be doing Gator every day, or what's the
No,
goal?
nobody
Yeah.
wants to do that, right? Yeah, and because we do the monetization along the way because we have bills that come in every
Mm.
single month, and so obviously we've got to pay those bills, right?
Yeah,
I couldn't
naturally.
exclusively concentrate on large multifamily because that's
Mm.
long-term money and it's long-term wealth generation. You know,
Yep.
okay, that's not totally true because I mean, if when we acquire a large multifamily, if it's a $20 million complex that we take down, the acquisition fee we get at closing, which could be 90 days or 120 days, will be $1 million. It's 5%
Mm.
of the purchase price. So I mean, people say, well, that's wealth. You could get a
Nice.
million
Yeah,
dollars
yeah.
after 90 days, right? But it's a
Certainly
one-time
doesn't hurt.
thing.
Mm.
Yeah, it's good. And they're rare, you see, those.
Yep. Yep.
You, it's a win
You're going after
for
the white
everyone.
whale while
Yeah,
also keeping
yeah,
paying the bills.
yeah, yeah.
That
So you
makes sense. Yeah.
consider that like a windfall type of thing. You
Yeah.
know, it's you want something that regularly brings in money for cash flow purposes.
Okay.
Yeah,
Which is, of course, no doubt why you also have the books and the legal shield and everything else going on. So you're
correct.
not, you're keeping things ticking over and
Yes, the legal shield is because every single real estate investor or anybody who owns a business needs an attorney, but especially
mm,
if you're real estate because you write contracts and things like that. So I bang this legal shield drum very hard because if I'd known about 22 years ago, I wouldn't have lost my properties.
right,
That's the thing.
right.
I'm gonna have to take this call. Do you mind if I
Yep, yep, no
pause?
worries.
Yeah.